morning, good morning, good morning, everybody. It is Wednesday, March 15th, 2023. It's about 6 a.m., and this is why we did not want to hold any calls overnight, like I was saying there in the alert room yesterday afternoon. Holding calls overnight means not buying any calls at the same time, even though I am watching that one group of strikes back there on April 6th, but I'll show you in a few minutes here as to why we're not doing that. But I'll bring you quick here because this video is not going to take a long time. Futures are down. Oh yeah, futures are down right here. We're not over. We're down 85 points over on the NASDAQ.
Just under 5 minutes away now until we get the
Now,
Eurozone industrial production
now we
month
are
over
starting
month
to speed
with
up.
a forecast of 0.3% on the prior of -1.1%. We also get in the Eurozone industrial production year.
There's a headline that came out just about 20 minutes ago, 15 minutes ago. Credit Suisse, Saudi National Bank, is not going to help them. Fair play. And what we're seeing right now is we are seeing a big drop over here on the futures. And it is not going to play nice. And the reason why it's not going to play nice is because you still have that gap over on the SPX down at 38.55, which needs to be filled. But as of right now, we are aggressively, very aggressively moving to this downside and looking to get that gap filled, which, if we do get that gap filled, will be oversold. That's the way the video game works. So move this back over, leaving you here. Yesterday, Green Day, imagine that, Green Day, 2 days in a row, we closed above the open. Wow. And yesterday being a Green Day, 63 points up above the close, only because you had that major gap up, 38 points, nice range. Out of bear market territory from the lows of the day, avoided that 38.55 for the first time in 2 days, but it still was one of those things that you get a much better peace of mind over there on the spreads. 39.45, 39.40s was the risk, 39.55, 39.50, the safe earlier in the morning, 39.80, 39.75s, the ultra safe, which was 30 cents in the morning. And then obviously that very, very early pre-market alert prior to the open, which you can only take if you have interactive brokers. This is not a plug for them by any way, means, or 38.55, 38.50, 67% full credit, plus $2 on that entry. And we are looking right now as if we are going to be having a little bit of a problem for those that want to overthink the situation. But let me just bring you here on that puts trade. Where did I save that? Yeah, this was your puts trade yesterday, having thrown it out in the alert room. I have no interest. 12 o'clock to right there around 3:15. You got 400, 500% if you wanted to get involved in that. But again, this is where the adults are, and I think you need to have a little bit more energy if you want to go there and day trade, scalp that stuff. August, OPEX, right here, you're having a look. OPEX high, boom. September, OPEX, as you see here, big move. We were at 41.19. Just remember that number, 41.19. And then the CPI report came out the next day, and we crashed. Remember, we had a big move to the downside here 3 weeks in a row over here in September. Here is your October OPEX week, right after we had that bottom from that CPI. Again, boom, here we are. Here's your OPEX in November. November's a little bit different because you got Thanksgiving. Gets a little bit boring over here in November. Here's your December. Powell spiked us up here to 4,100. 4,100 being a very important number. 4,100, and bam, threw us down. This is quad. This is quad. More importantly, I want you to be able to see here where you're at. Can you not see how you've not gone anywhere just inside this channel? If you can't, I'll remind you, we're inside of that channel and it ain't going nowhere. 4,100 right here, dropped down in December. And then we sat there and we chopped around until the beginning of January, first week. Here's your January OPEX, top, boom, big drop down. You see your drop down over here in November. You see your drop down here in October. Here we are over into February. You had your little spike up and then your drop down. Now that's where we're at right here. And having had that bounce yesterday, right to that 39.44, right where we were looking to get into, I'm not in any way, shape, or form convinced that we have proven anything about being bullish, that we still have OPEX, quad OPEX, and over $2 trillion of options that are going to be expiring this Friday. And no way in hell am I going to be going out here and buying any kind of April or late March calls, knowing that all they're going to do is fuck this thing about. You've got your gap to be filled over here at 38.55, and the only bit of evidence is that we're not closing down here under that 38.55. That's the only bit of evidence that is saying this is just going to OPEX and sort itself out, and then we will start moving to the upside. So into today, into tomorrow, into Friday, you want as little exposure as you can possibly have in owning positions, calls or puts. On the spreads that we've been throwing out, you can see you got some people were messaging me that they already closed out coin, they already closed out Tesla, they're going to be closing out Nvidia. Netflix still at work, but what I'm showing you here is Facebook. And here is Facebook on a 30-day view. And you see your spike up here over here from the ER, right to the 76.4 retracement from COVID lows. And this is going down to 137.10. So you got your bare minimum there at that 195. This right here, this 184 has been playing perfectly. This is your retrace to your 2018 lows. I'm talking from the bottom, not to the upside top, from the bottom part. And that 195, as I said, was about as high as I can get. Anything over this 185, I believe, is a bunch of bullshit. That was why I took that position that I took for June. And you've got your big ER gap to be filled, which fills somewhere around 153. There you go, 153, and your 200-day moving average under there, and your big 149, and there's a big 147 down there on the detailed chart. Bring it to my I don't have detailed. That's right, I don't have detailed because Thinkorswim deleted Facebook when they changed over to Meta instead of swapping over all your chart drawings. I fucking hated them for doing that. Anyway, here's your VIX. VIX 30 scared the hell out of us, got all the way down to 22. That's it. Time to get out. Boom. Here we are on a little bit of a bounce. This is your second set of evidence that we're having a very weak bounce on the VIX. There is not a lot of fear out there over the course of the next 20 to 30 days loading up on puts, but that's been persistent with everybody just doing zero DTE and very little volume on the outside. So QQQ is where your answer is. This is my answer. That 294 was to be the first sign to the upside. That 296.60 was to be the second sign to the upside. And here we are up here at 298. Because again, you are in a once in your trading career, first time popping your cherry virgin, experiencing a quote unquote financial collapse with these regional banks. And this is absolutely nothing compared to what happened in 2007. So the banks are rolling over, the money's coming into QQQ. As you can see here from 284 up to 298, you're up a little bit too much for right now. So you want to be watching your QQQ, watching this 294. If we do break that 294, very, very obvious, we're going back for that 291. And if we're going for that 291, then I hate to tell you, but we are going to fill that gap down here, and we are going right down onto that bear market line at 38.55. So this is very strong here, 38.55, 38.43. Down here, obviously, very nice position, very good position from somebody like me who draws. But unfortunately, the VIX is going to be a little bit expensive, which makes it a little bit difficult for buying short-term calls and seeing them appreciate. One last thing, which I will leave you with, and I apologize for being 4 minutes, 5 minutes into the video already. SPY has the dividend on Friday. And you're not going to notice that if you don't know about it, but you're going to see all of a sudden how puts are really expensive and calls are really cheap when you're looking right at the money. And that's because at the end of the day on Thursday, wherever the close is, overnight, SPY will gap down about $1.50, and that's the dividend for everybody holding SPY that gets paid. So you'd be looking at these 388 and you'd be going, wow, man, the 390 calls, they're they're only 50 cents. And you think you're making a right move, but then you got your gap down here to 386. Now you need a 4-point move to the upside. So you don't want to be in anything on Friday if you don't understand how the pricing works for OPEX Fridays on quad witching OPEXs, which is this Friday. And fuck this, man. This is more than enough because all of this is going to be solved out when we get into the open and into the chat room. So have a fantastic Wednesday. Throw your pancakes against the wall. Spill coffee on your boss's lap. It's Wednesday. You can do whatever the hell you want to do today.
It's fucking plummeting.
When the hell did we forget all that? I thought we were better than this. I really did. And the fact that we're not doesn't make me feel all right and superior. It makes me feel sad.
Every time I fucking hit refresh, it's dropping, man. It always goes down.
And as fun as it is to watch pompous, dumb Wall Streeters be wildly wrong, and you are wrong, sir, I just know that at the end of the day, average people are going to be the ones that are going to have to pay for all of this. Because they always
32?
always do.
It's 32. Yeah, it's fucking tank, man.
That's my 2 cents. Thank you.
I'm gonna drop a deuce at Deutsche.
Does our bull have a response?
Only that in the entire history of Wall Street, no investment bank has ever failed unless caught in criminal activities. So, yes, I stand by my Bear Stearns optimism.
Mr. Miller, I'm sorry, quick question. From the time you guys started talking, Bear Stearns stock has fallen more than 38%. Would you still buy more?
Yeah, sure. Of course I'd buy more. Why not?
Boom.